Hey, welcome everybody to the live stream. Hope you guys are all doing well. We've had a nice little run in the overall market in the past couple days, kind of coming off of the heels of the great short squeeze of 2021. It looks like things are reverting back to the larger cap stocks, or really just about any stock, except for some of these short squeeze ones. So for myself and my portfolio, it's been a good couple days. Looking today, my portfolio tracks fairly closely to the NASDAQ in the terms that I have a lot of technology and stuff like that. So NASDAQ up 1.8%, S&P up 1.7% as of here today. And we had a little run yesterday as well. And I know that if you're part of the short stocks, it looks like those have suffered a little bit today, but I hope that everybody got out in time to make some money. As I've mentioned before, I wasn't involved in those trades, but I was rooting from the sidelines. So if you got into that game, man, I hope you made some money. It looks like there's a lot of really cool stories. The most recent one I read was somebody from the Reddit board or GameStop short buyer, whatever. He made a ton of money and he went out and bought like 100 Nintendo Switches and gave them to a children's hospital in his area. So really cool that some people are doing stuff like that. I read another story about a guy who made a bunch of money off of it, and he went to all the GameStops in his area and gave each worker like $100 bill or something like that. So a lot of cool stuff when like the little man makes big gains. We seem to recognize the concept of sharing our good luck, whereas, you know, you wonder about that on the Wall Street folks sometimes. So anyhow, so bottom line, you know, there was a lot. If you read this weekend, anything about the stock market, general articles, anything, I feel like the sentiment was down. People not wondering what the short noise was going on, maybe worried about the fact that the market might be manipulated. Then we had this big silver rumor going on behind the scenes. I thought it was going to be a rough week. I thought a lot of people were going to try to pull out and sort of stay on the sidelines while some of the storms passed. But man, the buying has really kicked off big. So hopefully your stuff is doing well too. I'm going to take a pause here. And I know last time I let too many questions get going before I got into my spiel. I do have a couple things if we have time. SZ's in on Exxon. I saw energy was big today, some just from tweets of people doing their little memes and stuff. It looks like Exxon's up 1.9%. I've noticed the gas prices in general are going up, at least in Cincinnati. So maybe if you're in oil, I am not, but if you're in oil, I've said it before, I think that, you know, stay strong, because my 2 cents is the summer's travel patterns, both from a jet fuel perspective and America driving in their cars. And America is probably stupid. It's probably like internationally, right? Like car vacations, jet vacations, stuff like that, I think is going to be huge. So if you're in oil and you have been and you've got a good cost basis, I think that, you know, you wait through the summer, because I think it's going to be good. That would be my 2 cents. Let's see. Tara Chang has some new pharmaceuticals. We don't do a lot of that here, Tara, or I certainly don't. So I'm not going to look at that pharmaceutical just because I don't study those and I don't have the scientific background. Not Tesla, TLSA. I got to tell you, I'm not going to cover that one today because I'm not good in pharmaceuticals, particularly if it's small cap, so sorry. Okay. Mohammed Ibrir says, asks about NEO. I don't buy Chinese stocks. And what I did notice is NEO's down 2%. Today I do follow it because it's an interesting stock and it has a lot of ups and downs. I saw that they did a report, I think that was yesterday. Yeah. Or maybe that was Li Auto. Anyway, I thought I had read a report that NEO's model sales were doing good. Now I look at it more closely and it says Li Autos. So not sure which one it is, but I think, that Chinese market is really hot. I saw a high-level report, headline thing yesterday that their EV sales were already on pace in January to be up 250% or something for the year. I suspect that will continue. So NEO's right in the middle of that. Just my preference. I don't invest in Chinese stocks, but best of luck to you. Any stock but Rocket from LD, man. False promises, man. We looked like we were going to make a move last week. I was really excited, and it's back to the norm. That's okay. Got earnings date officially on February 25th, so we are going to have to get some answers at some point. And I will also say, while it's not apples to apples, they do have that big Super Bowl Squares game going on, which has nothing to do with their stock performance, but it is a good, that seems like a fairly successful contest that could drive mortgage leads. We do have good interest rates right now. So maybe one bleeds over to the other. I'm not sure. What I am very excited about, though, is the earnings call on the 25th because, there's a lot of outstanding questions. Most notably, how well did they do to finish off the year? How well are they expecting to do this year? What is the pulse of the market in the winter time, which we know the winter sucks, but maybe they're doing better than expected. And just their overall sentiment on how sales are going to go. You guys have heard me say a few times now, maybe it was November, December, there was a lot of stuff, particularly on YouTube, about more housing crash. And because of the Los Angeles and New York people moving out, dude, there's no housing crash. And, maybe in LA and New York because of other reasons, right? Because California as a state is, mismanaged, in my opinion. And then big cities in general are not super attractive after the pandemic. So take those things out of the equation, and there is no deflationary activity in housing whatsoever. And you don't have to take my word for it. Just go read around about housing starts, construction materials. Go check your house, your neighborhood. You're probably up a couple percentage points on your house's value, even since Thanksgiving. So don't fret a housing crisis. The only crisis is we don't have enough of it. So that's what you put all those things together. I still feel good about Rocket. You guys know that, and you know that I'm holding long. But folks like LD, who I know have been in it for a while, just like me, it sucks. It's just painful. But we got to carry on. You do not, in my opinion, there is no reason whatsoever to take a loss on Rocket right now, because tomorrow is going to be better than today. It might be by a penny. It might be by a quarter. But every day that we get closer to peak buying season is better for Rocket. So my 2 cents is to hold long on that one. Rocket to buy, since we're talking. Let me see where the price, I haven't looked at it in a couple. So you're at 2109. To give you perspective, my Cost basis is under 20. It's like 19 and some change, something like that. 2109 maybe, if you wanted to start a small position. If you believe in housing and mortgages like I do, but just know that unlike some of the things you've seen in the markets here recently, and I'll show you a quick chart of Rocket, the GameStops, the whatevers, you're not going to get rich tomorrow. So if you want to get in Rocket at 2109, you promise me you're not going to even talk about it until October, I would say go for it if you can hold it that long. If you're expecting it to be something else, then, like if you're expecting it to be $30 by June, I think you'll be disappointed. You can see basically flat line, and it's had a little bust during all the short squeeze activity because Rocket has some shares short as well. Now you're settling down. The past year, you're essentially flat line at 20, right? So here's the IPO. You went up on August 7th, 25. This is where we all thought we were going to do really well if you were in at $19. And then after Labor Day, it's been $20 So it is what it is. Don't forget, though, when you read a stock like Rocket and some of your SPACs and other things that you guys believe in, Rocket does not have a full year of public accounting in place as far as EPS and expenses and revenue. Everything that you submit when you're an IPO or a SPAC or whatever kind of goes by that pro forma, which is not the same thing as general accounting principles. So the people who are judging Rocket, just like I am judging Rocket as far as expectations, none of us have the full data. None of us have a year of data yet. So we will get more on February 25th, and perhaps most importantly, we will get the full year. So when that comes out on February 25th, you'll have an actual feeling of what they did for 12 calendar months. And then, like everyone else, we're hoping to get the guidance, right? Which is kind of where Apple stumbled a little bit. They destroyed, like they always do on earnings. And once again, they wanted to play the we're not giving guidance game. And it always keeps companies back. That's going to be your Amazon today, too. I think everybody in the room expects Amazon to destroy it. I certainly do. But are they going to play the same game as Apple where they're like, we just don't know. We're going to be conservative on guidance. And if they do that, don't be surprised if Amazon slips a couple points. I was really biting my nails. I'm only going to own 2 or 3 shares of Amazon. I have 1 so far. 3 is about what I would care to do in an individual stock account just because I'm overrepresented by Amazon in my ETFs. But I'd like to own 2 or 3 for the long term. And I was biting my nails this week of like, hey man, should I get another one at 3,200? And we're up to 3,400 right now. And you would say to yourself, on paper, you would say buy before earnings because earnings are going to be good. I wouldn't argue that in a standard scenario, but the way people have been sandbagging guidance, if they come out and say, we just don't know, the stocks are going to go down a little bit. No matter how, if they made $1 gajillion and they said, I think 2021 is going to be difficult to assess, the stock will go down. And it'll be a buying opportunity for sure, but that's what happens in these games. All right. Semiconductor stock. And there's a lot of those. I did one on Micron. I wouldn't say that Micron's the best from an innovation standpoint, but as of a week or 2 ago, they were definitely one as far as buy low. So let's take a look. They probably shot, nope, they didn't shoot up. Okay, so Microns Pe, is this showing? Sorry, guys. Yeah. I just want to make sure that was showing. Microns PE of 3083, seemingly high for a semiconductor stock, but as I was pointing out on a recent video, their average estimate for next year, sorry, don't stop it, 793. So they have a strong potential to jump significantly, not to mention they're going to be at 415 likely by the end of this current year. So if you divide 8164, right, by 415, that's a PE of 20. If they jump over into 2022 and double up again, now you're at a PE of 10. So I think Micron's an incredible value. The only issue with Micron is they're not necessarily like a super technological branded play like NVIDIA or AMD or Intel, right? They work in like the memory sector, and it's very small margins, but they're good at what they do. Outside of that, I've been clamoring for NVIDIA for a long time. Between the hot names of AMD and NVIDIA, I would side with NVIDIA myself. And mostly because they're just a technological powerhouse, and they have so many new products amped up. They get good earnings. They have a small dividend that will likely grow over the future. So I like them. And then finally, Qualcomm, who I know the least amount about out of the bunch that I've mentioned. But what I can tell you about Qualcomm, 36, 35, so they have $5 a share, 1.61% yield off of today's price. And Qualcomm's growing at a pretty good pace. Last year, let's see if this is showing here. Last year, they were at $4.19 for earnings. This year projected at $7.18, next year at $8.05, and this is next year 2022. So just like Micron, this $8.05 almost for sure goes up. So if you take $8.05 as your forward EPS, your PE's in that 20 range, right? So those are the three. If I had all the money in the world, I would probably still buy NVIDIA just because of their technological advancements that they seemingly make on a daily basis. So that's best growth semiconductor stock. I'm sure there's some small cap names that I'm not familiar with that you can try your hand at. For me, I am all Taiwan Semiconductor. I think you guys know that, TSM. They are not going to have the same growth rates as some of the names that I mentioned here, but I really like TSM, and they're expanding at a huge clip, but their game is different because it's manufacturing, so it doesn't have as high of profit margins, but they're building a new plant here in America, in Arizona. They've got Apple as a client. They've got AMD as a client. I'm not sure about NVIDIA. And then Intel is going to outsource some of their other chips to them, not necessarily their laptop ones. So I like TSMC if you want to get on this like next level, not where the consumer is, but you want to be in the manufacturing side with sort of guaranteed contracts. And TSMC is a good play, and they have a great dividend too. You probably missed a good time to buy TSMC last week because it was around 120, and it's already run up. It's TSM ticker, by the way. The company's Taiwan Semiconductor Manufacturing Company, ticker symbol TSM. Let's see. Yeah, last week they hit some 120s. They're up to 128. Their PE ratio is getting a little out of hand at 57, and though I do think it, comes down as they report more earnings, it's a little expensive. I got in at 78, and I'm thankful for that. I would not buy any more shares at 130 or probably 120 is the first place that I'd start. And I would really hope that I could get in below that point because they're not growing like their price insinuates they are. I can tell you, like next year is about a 15% growth rate. They say next 5 years at 25%, maybe. I don't see it myself, but because every time for them to grow, NVIDIA can grow, AMD can grow by making new sort of inventions, right? Or the speed of their chips and whatnot. TSM can only grow by building more factories, right? And getting higher level clients. Now, Apple by themselves, with the M1 chip, if Apple digs deeper into that world, which I think they are, then you've got a company on the hook for a long time that could be profitable. So just be careful is what I love TSM. I'm in it. Just be careful at today's price. I don't know if it'll go down because that's this year as things don't go down anymore. But be cautious. Rocket lockup is tomorrow. Whoops. I'm hoping for analysis to put the fire to the board's feet in the earnings call. Okay. No, they have not communicated in a while, LD. I agree. It's been very quiet. They have another angle too, which is they have a lot of shares. They're doing a buyback, plus they hold the lion's amount of shares. It'll be interesting. Don't give up yet. We'll give them a chance. I am aligned with you in impatience. But we'll give them a chance on February 25th. Disney or Netflix? I like this question. I think it's a really fun thought. So if you could only buy one, I really like Netflix's growth rate from an international standpoint. And I like that what they sell is easily replicable, right? And they're becoming the new cable TV network. So I would likely buy Netflix with my money. However, last week when Disney was under 170, let's see where they're at today. Today, freaking 177. So that's what I was talking about. Large cap stocks have went up. So last week on the 27th, they were 161. And I was saying, hey, think about it because I don't know if the stock's worth it today. They have a negative 12-month stretch, so it can't produce a PE ratio. That's what this is. They are a profitable company, though, in a normal year. But 177 if they hit $1.51 here in 2021, you're over 100 PE, right? But then next year, they could get to 473. If you want to go on the high estimate, they could get to $6. Now you're talking about, let's see, 45-ish type PE. Would have been better at 160, and now we're starting to push on the high range. So that's it with Disney. I think both stocks for the long term, a cop-out comment would be both stocks for the long term are good. I think Netflix right now is in slightly better shape today than Disney, only because Disney's, theme parks is 35% of their revenue, and we can envision that turning around this year. It's still likely going to be until June. The California park, Disneyland, is still not open, and California has some leadership problems. I'll leave it at that. So who knows when they'll let them open again? It's hard to tell. So I'd go with Netflix. Beyond Meat, LMT, and Open Door. So Carlos, Beyond Meat, I think that world is getting pretty big. They're not alternative foods, but what's the word, like sort of vegan or vegetarian food category, I do think that that will be large. The only thing that scares me, and I've shown this before with Beyond Meat, and this is only analysts, so, shit can change. If you go down to, let's see, this is revenue estimates. So 409 million to 613 is the estimate for next year, which is technically this year, 2021. So you've got about a 50% increase there, which is great. Somewhere down here, though, I don't know what this is over the 5 years, which is a negative growth rate. And I don't think it shows up. Unfortunately, it doesn't show up on the screen very well because of the way I had it. But they have a negative growth rate over 5 years of like minus 200%. So I don't know what that is and why that's there. So my only take with Beyond Meat is trying to figure out like what's the home run, right? $600 million next year is good. But what is the thing? Because everyone's going to throw at you the vegan, vegetarian market size is $60 bazillion and some asshole stat that, is so high level that you can never get anything out of it. Beyond Meat needs to have huge distribution partners at some point. And if they've got that in the works, and if you understand that category, which I do not, because I don't eat that food, I'm a regular steak and potatoes guy. But if you understand that world, I think it's very competitive. I think I know. So, you go to any sort of upscale grocery store, Whole Foods, whatever, and that world is nuts. How many labels are on there? So just be careful and try to get it at a good price. It goes up from here to some degree, but how long are you going to have to wait for earnings to catch up to the price you're paying today? And that's the X factor with Beyond Meat that I can't answer. LMT, I don't know if I know that one. Oh, Lockheed Martin I talked about last time. P ratio of 13. A lot of good stuff going in there. The biggest, and this is a good headline here. Let me show you one thing on Lockheed Martin. I'm not going to spend much time on it. But they're getting put into this space category, aviation and space category. There's not a huge headline here about that, but I read a whole article about it. And apparently in one of the space exploration ETFs, Lockheed's like the number 1 or 2 holding. So in that sense, it could find a scenario where it trades higher than its current PE of 13, right? Which is like, if you think about Tesla, right? Lockheed, without even looking, I'm sure Lockheed Martin makes more money than Tesla, but Tesla trades at a higher valuation, and that's the difference when you get the $900 stock. So if they are doing a space program, I think it could be a good play. I think, they also have an aviation unit, and I'm not sure what's going on there, but that could be another one that I'm assuming is, in a tight spot right now after COVID because of aviation in general. So it could be good. I would dig in and see what they're pushing for 2021. But there's something there, and it's certainly from a value stock standpoint, it's got an attractive valuation point, and you also have a dividend, $10, 3.21% on today. So, you get, that's kind of like Boeing. You get some money no matter what happens. So it just depends on if it fits your portfolio. You asked about Open Door. I haven't studied it yet. I want to. It's interesting. This would definitely have the feelings of a stock that could get too high too fast. I don't know if $28 is that number, but I would need to study it more. I still think Zillow has a pretty clear competitive advantage from being the first mover. However, I was starting to come around on Redfin at the end of the year, and then Open Door showed up, and I'm just behind on the research, so I don't want to lie and tell you it's something when it's not. This is kind of cool. I was going to lead off with this, but I did questions. So if you go to this website, App Annie, shucks. Let me do something real quick because you can't see it very well. Sorry. Okay, there we go. App Annie. And you have to sign up like you have a business, okay? Just to help you out there. If you've got a work address or something, sign up there because they're really trying to sell to businesses. And they sell a subscription of app statistics, always very interesting. And you can sort by top apps by downloads, top apps by usage penetration. They want a shit ton of money for the subscription. I just do the free one, okay? But they want like $5,000 a year. But you can see some cool things just by doing the free searches like I'm showing you here. The only catch is you cannot sort by a lot of stuff. So you see all these locks that are on mine? It's because I'm on free. So that sucks, but it's not worth whatever they were charging. I mean, I don't mind buying research. That doesn't bother me at all, but I'm not paying that money. Okay, so what I was going to lead with today, and this is where Open Door and Zillow and those things you can do some cool stuff with. This is top apps by downloads. Last full week. Hold on, my phone's ringing. And you can see which ones have been loaded, the most, right? But what I was going to call out to you guys was we're heading into the Super Bowl, and you've got DraftKings, FanDuel, DraftKings, and you bet MGM and all that. And if you switch over to Android just allowed gambling apps to come back on their market. Okay, so... And look what happened last week. DraftKings, FanDuel, and I'm sure that we'll see a lot more that go on there. Now, since we were talking about Open Door, let's see if I can give you a quick read here. I have to figure out what category it would be. That's the only thing that sucks. Let's see if it's a shopping. Probably not shopping. I'm going to give it one more try, and then I don't want to bore the rest of the group. Tools, widgets. And we'll try tools. Nope. All right. Well, you get the picture. You can go in and fool around with this. How about overall? Not on there. All right. Check out App Annie, though, for free. They're going to try to call you and everything, to sell you on something bigger, but it's out there. Take. 1 second, I'm answering a text here. Sorry guys, I got kids getting off school and all that stuff. Okay, let's go back to the questions. So we were on open. What do you think will happen with Amazon? I was talking about that earlier. If they don't provide guidance for this year, the stock could go down, despite the fact that they will likely destroy estimates. Now, if they come out and say the world is awesome forever, then on that scenario, they'll go up again. Banks starting a new uptrend. Goldman Sachs and JPM. I don't do anything with banks myself, but if I ever did, it would be JP Morgan. So I'm just going to take a quick peek here to see what's going on. Yeah, it does look like they're making a little bit of a run. I can show you. So banks were down forever. This is JP Morgan, okay? Banks were down forever after the pandemic. JP Morgan was 138 prior to the pandemic. They got right there and then they slipped back down. And it was interesting because if you go by their earnings and stuff, it wasn't like a huge, the pandemic didn't like destroy them completely. Let's see, earnings history. EPS. There's earnings history. So they were still making money across the pandemic. I mean, they made more money here in December, but they're not in crazy dire straits or anything. So if you believe in that model, you know, bank stocks are slow growers at low PE levels. And then, of course, you get the dividend. They are long-term game, but they are typically strongholds of value, right? So they're going to do better than a savings account when you include the dividend. And to your point, they're down a little bit here. Now you are getting close to last year's high, or last year's point before the pandemic, but why not? I mean, it's a bank, unless a bank gets in a scandal, they are not going to ever dip by more than 20%, right? It just doesn't happen. Switch is up 7%. Still doesn't feel like an unreasonable price. I love that concept of that company. I heard it originally on Financial Education with Jeremy. A random video he did 6-8 months ago. I have not bought in. I like the concept, though. I'll just leave it at that on Switch. 7%. There was some weirdness, if I remember, LD, there's some weirdness, though, on their growth rate. It is not necessarily like a straight edge because they have to build each one of those warehouses. They only have a handful, and it costs them a lot to build them. So just take a look at that before you buy in. SC, thanks for the kind words. I appreciate it. Boeing for the long run, for Medi, yeah. One day Boeing will be back where it probably should be in the aviation market. It's hard to say it's the bottom, though. They just came out and with a little bit of a crap earnings because they paid off some other expenses. I don't remember what the deal was, but I listened to the CEO on CNBC. And whatever, you know, the gist of what he said was we took the opportunity at the end of the year, which, you know, let's just get a 1-year chart. Pandemic, no surprise, not to mention, you know, Air Max fumbles across the board. Then you started to have this return before the holiday season as airlines were getting back into gear. Then we had election drama, not to mention pandemic spikes. Then they come out with their earnings and say, we paid off something at the end of the year, so we did worse than we thought. You're under $200. Pre-pandemic, you're at $350. Looks like they suspended the dividend, which you have to agree with. If I guessed, and since you were talking long term, I would say you got $300 sitting there. Is it by Jan 1 of next year? It could be. I could see that. I would imagine that airplane orders, though, if I ran an airplane, I'll just do the common sense for you. If I ran an airlines, I'm knee deep in debt right now. things are looking better. I'm running through December on just making money, right? And then on the 2022/2023, I'll talk about buying in new airplanes. So that's what I would expect would happen with Boeing. Every airline, maybe not Southwest, but most airlines are underwater. They need people to fly. They need massive amounts of revenues to come in, and they'll get it. I think they're going to be booked solid from the 4th of July through Christmas of next year. But in the short term, for Boeing's orders, I think that to hit 300, it might bleed into 2022, if I had to guess. And that's only if I had to guess. Now, the bright side, what could go different than that, is the scenario I just said holds true, but the airlines, we'll just say American Airlines for fun, puts in the order for their airplanes at the end of 2021, right? So let's just say November. They order 100 737s that take, by the way, they take like a year or two to make, but that headline will get Boeing back in. So I think you got an easy $100. If you're going to hold it 5 years, you're absolutely fine. Go for it if you like them. Thanks again, SC. Thank you so much for the nice words. Snap after earnings. Snap's on fire. Although, if you go in that App Annie report, they've actually lost a little traction. So, funny enough. That's why it's worth signing up for that stupid thing, even though you're going to get pitched to buy. I don't own Snap. I think the people who won at Snap bought it in the pandemic for $7, and they're sitting at 42. I don't know what's left from there, but use Pinterest as your example, because I don't know what's left in Pinterest, but it keeps going up. So maybe it's a good play. XSD ETF. Semiconductor okay. Yeah. If you don't want to pick a semiconductor, you could do that. Just know that the wacky thing about semis is that it's cyclical industry. So we're in a huge 5G and computer crunch right now coming on. Well, the 5G was going to happen anyway. The pandemic pushed up demand for laptops, desktops, etc. So we're in a boom market. Where are we in 2024 is probably the better question. And that's when you'll see semis come down a little bit. So guys like Micron that they're not like patent heavy, right? They're like manufacturers. They make shit, just like TSM. Whereas NVIDIA, Intel, AMD are going to be patent heavy. Like the stuff that they make is very specialized and they own the secret recipe. So they'll do okay. Manufacturers like some that you'll find in that ETF are going to not do as well. So if you're going to hold that ETF, I agree it'll go up. Be ready to drop a parachute though once you've made X amount of returns. Say, every year you got to look ahead. Probably at the end of 21, do a market outlook. Make sure you're still good with that ETF. Do the same thing at the end of 22. Eventually, this cycle will go down. Let me get a drink here. Chestad paused on Amazon. I couldn't get it exactly where I wanted, so I sort of paused too. TTCF from Goran. Sorry. Tattooed Chef, same thing as, what's it called? Beyond Meat. Make sure that you understand how they're going to grow 50%. Make sure Tattooed Chef in particular, I don't think has a huge line of stores that they're in yet. They will likely do that. Follow their stores. Go to their latest press wire. I don't follow this industry. I don't eat this food myself, so I just don't have a whole hell of a lot of interest in it. But I will tell you that if I was in Tattooed Chef today, I would be on their website, on their social media. I want to see that Walmart's going to carry 5 or 6 new things, right? Target, Kroger, that's what I want to see because that tells the story. Then when I'm at the grocery store, I want to look at the inventory. You know, you said you got into Kroger, but there's freaking 2 boxes here. That's what you want to look for because consumer packaged goods is no joke. And I've said it 100 times. Competition is brutal. And as soon as, I don't know, Kellogg's or somebody wakes up and like, shit, we need to make whatever Tattooed Chef's making, it could be over that quickly. And I don't think that that's a stretch. Now, the flip side for Tattooed Chef, because they're so small, is that buyout scenario. And that wouldn't surprise me either. So if you believe in the product, you eat it, and you think it tastes good, and you see it everywhere, buy the stock, and maybe they'll get bought out, because that's what ends up happening. I wish I could remember some of the big food brands. Pepsi's kind of one that you could take a look at, but just because I can't think of any others, go to Pepsi's website, go to the section that says like our brands or whatever, and you'll fall over. You will fall over at how many brands live underneath PepsiCo, and it's stuff that you would never ever correlate to Pepsi soda pop at all. That's what you want for Tattooed Chef to do in the next probably 12 to 18 months, because it's absolutely brutal to go there by yourself and take on Kellogg's. And your only like super selling point is that you're not made with meat, okay? And you taste good. But I got news for you, like cauliflower pizza, it's not a fucking secret sauce, okay? Like anybody can make that. It's just who's going to make it first and who's going to market it better. Sorry, I got a little passionate there. I just don't want you guys to lose money. HOL to the moon, don't know that one. HOL, Holicity, $15. Looks like it's either a SPAC or an IPO. Recently $10, now $15.79. Sorry, don't know. Astra. Rocket maker Astra to go public through merger with Holicity. All right, so the space theme is hot right now. Older fellow like myself, I don't understand it. I would be very surprised if I live on Mars before I die, or visit it for that matter. However, it is hot right now. And what I do see is more space uses, satellite, GPS, all that stuff. So, why not? And you're already up, whatever, 50% from $10 to $5. So good luck with that. It is not on my list. QuantumScape is getting attractive. Yeah, Andy, I like it too. Is it still $50? Because I know you're not supposed to do this, but that bugs me. That you've never sold a single product, and this is where you're at. Yeah, I see it's down to 42. Which does get a little more interesting. And the 5-day chart, here's your 5-day chart. It is definitely on the downward swing. So that's interesting. I have to read about their I read the high level about their technology, which is, basically quick charge. Eventually get to a world where an EV plugs into the wall for like 5 minutes, like a quick charge on your phone. So it is super interesting. I'll have to study it more. When it jumped from 0 to 50, it kind of I just knew that it wasn't for me. But if it goes down a little bit more, or you can catch it on a downswing. The thing about a stock like this that you can almost guarantee will happen, they're not making a product until like 2022. So eventually everyone who's excited by the new research report is going to get bored, right? Because their stock isn't doing anything. And then it'll end up somewhere, you know, maybe $30 if we're lucky, maybe not as low. But people are going to get bored because they don't have anything. They don't have any revenue. They don't have any products. And if you're smart, that's when you sweep in and pick up one. My 2 cents anyway. Let's see. Micron, yeah. The Micron Pe is low because it is a commodity. You are correct. And but it's in a high cycle. Is what I would argue there, that they have more orders than almost they can handle. So that's why it could break out of its sort of traditional PE. I like that one, but you know, to your point and what I mentioned before, they do not have a Ryzen chip. You know what I'm saying? They just produce. But production is behind schedule in the market, right? There's more demand than there is supply, and that's where Micron could move the needle some. Percentage of cash to keep available, it's always hard for me. I would say, you know, if I was doing it right, I would have at least 10% ready to go in my portfolio, like already transferred. But the problem that happens with me is I put it in there and then I start nibbling at stuff and it just disappears. But that's what I would do if I was a better, more disciplined person. The one thing at the end of this pandemic that I think for younger folks to keep in mind, though, and this I never screw around with at all, and that is any money that you're going to need over the next year should not be in the stock market. And I really do believe that. So I have a separate savings account, right, for stuff that might be coming up or house repairs or whatever. And I do not screw around with that money at all. I consider it gone, even though it's there. So make sure you do that because you do not want to worry about an easy one in my life would be like home insurance deductible. So house insurance deductibles are really high. So like if you had a flood in your basement, I think my deductible is like $2,500. And that means that any repair under $2,500, I'm paying out of pocket anyway. And if I needed a big repair, like let's say a tornado sucked my whole roof off, that obviously is going to cost more than $2,500. But I always have plenty of $2,500 in my account so that life can move on, right? I don't want to have to wake up and sell stocks to get the $2,500 because that ruins the long-term game. So that's how I play it. Let's see. Bullish on Amazon and Google. Love Google too. It looks like it's on an upward swing. We're getting to that point. It's almost 4 o'clock that these earnings are going to come out. Any thoughts on NNDM? No. I've gotten a lot of questions about NNDN. Just some sort of nanometer, nano dimension. A lot of people asking about this. I don't know anything about it, but it is popular and it has high trading value. I'm just reading something here. Provides additive electronics in Israel. Its flagship products, lights out digital manufacturing, produces professional multi-layer circuit boards. I don't know, but it is very popular. Let me see some here. Volume. Okay, 30 million shares traded a day, sometimes higher. Like, that's a lot for a $14 stock, just to let you know. Let's compare it to, who else is over here? Switchback Energy, since it was on the board. 2 million shares, okay? The other one was doing whatever, ridiculous amounts. So that has all the makings of a momentum stock just on volume alone. So if it's a momentum stock, you really wouldn't even talk to a fellow like me, because you're basing everything on the demand from the market. You wouldn't want a guy nosing around on your debt levels and EPS and stuff like that. So Nano, you're probably going to be better off watching the discussions, watching the volume, and see how it does there. Does Amazon transcript come out? I don't know. Good call. Are there any high-flying stocks right now that bow for you on why they are trading so high? Always. Let's just see what was popular today. Just to kind of spur some ideas. Today is, well, GameStop. What is Virgin Galactic? I wouldn't say that's high flying though. NEO would be one that I think at 55 maybe not, but if soon as that thing gets to 100, now you're way out of the zone. Guys, you can always do in your head, really simple thing you can do in your head is just remember that a $1, let me see, how should I put this? A $100 stock, okay, with a $1 EPS has a P ratio of 100. So hopefully that makes sense, right? So if you ever want to like eyeball something, like a $200 stock has $2 in EPS, its PE is actually 100. And I use that all the time. I don't know if it'll relate to all of you, but as a way to eyeball it, right? So when NEO gets to $100, they would have to make $1 EPS to have a PE of 100, which many would argue is right in that sort of high growth stock top level. It certainly used to be before this bull market, went crazy. And now you got things that are 200, 300 PEs, that's crazy in normal times, right? Like Amazon, everyone makes the example of Amazon, and yes, Amazon was expensive prior to its time where it started making earnings, but when it first made earnings, it was only like 90 to 200 PE, something like that in there. So it wasn't like absurd like some things are today. So when you see a stock that doesn't have EPS and it costs $600, just to make some shit up, just know that you're way over. Like you need to make $6 per share to even come close to a PE of 100. And most companies, when they come live with an EPS that's profitable, it's going to be in the pennies. What's a good one? Good example? Hopefully it's right because I'm doing it off the top of my head. AMD. Great company, great growth story. Oh, their EPS is up. This number here used to be like 75 cents. And they've grown, and they've obviously had a hell of a year, and they just reported outstanding earnings, so I'm sure that has something to do with it. But right now, AMD at a 43 PE is not as high as some other things that you would see out there. And I assume that they're forward, and this, I don't even know if this would be right. They're saying 2022 only jumping to 252. I bet you it's more like 3 by the time we get closer to that point. And now you're in the 30s. So it makes sense, right? But you're going to see Melly is one. Mealy. $1,600. They're not quite profitable yet. And I know it's a compelling story, and I have no doubt that it gets bigger. But now you're into price to sales. Now you're into, EV EBITDA. And I know that EV EBITDA is becoming very popular. But I'll tell you my one thing, and people might crush me on it. The reason I don't like EV to EBITDA is because it has market cap in the formula. Okay, market cap is stupid. It is just a function of your stock price. Like I don't know, like the intrinsic value of market cap from a valuation perspective. I don't see it. People will rip on PE, and guys that look at value through PE like I do, as saying that it doesn't capture the whole company. And I disagree. What I will say is the thing that it does not capture, and you have to pay attention to, is debt. There will be a time coming up when the cruise lines, for example, will get back to a low PE if they're still at like $20. Maybe that's the first part of 2022. They'll have this PE, right, that says 20. And you'll be like, oh shit, cruise lines, whatever. But behind the scenes, those guys are way in debt, and it's going to take years to pop out of that. So the only thing wrong with PE ratio, in my opinion, is debt load. And you would probably need to throw in there on PE that you should be looking at growth rates, which you guys know I do all the time. And even though I do rely on a lot of analysts to give me a growth rate projection, I'm also reading about companies and trying to understand where that projection comes from. I went on a long-winded rant there, but I think the original question was, is there any company that worries you from a valuation perspective? Hopefully through that rambling, you got what I was getting at. Somebody's doing a COVID thing, okay? Watching from Sweden. I don't follow European, Swedish stocks. Unless the only one that I'm super familiar with is AMZN, which is a fintech payment play. It's interesting. I'm not in it though yet. At one point, Amazon has 3,500. I don't know about that, but you might be right that Amazon had a 3,500 PE. Let's go look. The one thing that's cool about Yahoo, there's a lot of cool things about Yahoo, by the way, if I may. But you've got this statistics, and I pay a couple bucks a year. Okay, let's go way back. Trailing PE 2007, 82. There is a 600 back in 03. They got over 1,000 here, so that's that would have been a time when I would have been bitching for sure. And then it looks like came down, got into the 900s in 2015, and then it's been, in this recent stretch, let's say I skipped this, right? And I was giving you guys the same rant that I just went through. And then the next year it went to here, and I said, well, now I see it. Now I see the growth matriculating. It ain't like I didn't make a shit ton of money from 16 through 20, right? So the guy who was here probably made a little more, but he also carried this risk. I got in the year after at a much better valuation and more clarity, and I still made a ton of money. I don't even know, we'd have to go to the chart to see. Here's 2016. Granted, that P would have been at the end of the year, so let's just scoot on over to December. I bought it. If I would have bought it then, I would have bought it for $750. Today, you're at $33.80 in 5 years. So I wouldn't have felt bad. Hopefully that makes sense. All right, guys. It's 4 and I've got to run, and I know I missed a couple. What are your expectations for the market when people get at 1400? Yeah, so interesting thing about that, and this final thought on the day, when stimulus comes, and I think I've told it to you guys before, Square, Cash App, it's everything in that world. And now go read the headlines on Robinhood Cash App users or something. A lot of people, the speculation is from app data that the people who did leave Robinhood are rolling into Cash App. And so a lot of strong potential there for Square. Square is another one that I actually own and I'm closing my eyes on, that has a horrible valuation in today's metrics. So I do break my own rules sometimes. It just depends. I wouldn't even say sometimes. I would say I break my own rules this time. So anyway, guys, hope you enjoyed it, and I am going to try to come back on Thursday and Friday. I really like doing these for an hour or so, and I really appreciate everybody's support. I think the most recent video is a Microsoft one that I published yesterday, so if you haven't seen that, go give it a like. I really appreciate it, and we'll see you soon.